Good morning. The People's Bank of China is their central bank, like the Federal Reserve in the US. And the PBOC is using the Shanghai Gold Exchange and vaults in Hong Kong and in friendly countries to store their own gold reserves. Now they're expanding, and they want to be the custodian of gold reserves held by other countries. That would strengthen China and the other BRICS countries and their new financial system, which is outside the US dollar, and the SWIFT banks in Europe. This is also very bullish for gold and will push prices much higher over time. Here's why. The People's Bank of China is not asking other governments to move gold from vaults in Europe or the US and haul them over here, though they probably wouldn't say no. But instead the gold will be from new purchases. So consider any country that runs trade surpluses in dollars or euro. Those funds could be swept from banks in the US or in Europe, custodied in Hong Kong or here in mainland China, and then used to buy gold. It so happens that China is also the world's largest gold miner, with over 30 tons of new gold supply coming out of the ground every month. So this is a triple whammy for the US dollar and a bonanza for China and the gold bulls, because foreign central banks and sovereign funds are shifting their foreign currency reserves out of our banking systems and into theirs, and then trade those dollars and euro for gold. And the source of most of that gold is coming from Chinese gold mines. That's why that line there in bold at the bottom of the page here on Bloomberg is the most important sentence in their entire report. Gold prices are on a tear, up 40% for the year, which isn't even over yet. It's already the biggest move since the high inflation days of the late 1970s. Under that surface and noise, though, is that China's central bank's moves with their Shanghai Gold Exchange and the system of vaults they've set up across the world are rerouting the world's gold markets and financial systems. The offshore vault push is moving the center of gravity in gold. The new system is a time zone tilt, a geographical tilt, and a power tilt. It allows for 24/7 price discovery and trading and gives countries a place to store their gold outside of Western regulators and politicians. Any BRICS country, any energy producer, and we should also say that any country that does business with BRICS countries will find all this very appealing. And it's too late for the West to do anything about it. The sanctions on Russia in 2022 put all these efforts on hyperdrive for countries to get their reserves out of Western systems. Add to that Chinese supply chain dominance and mines across the world for almost all the raw materials, and it's now we see their strategy behind everything. She makes a strong argument, and if so, we should expect this chart to look a lot different over time. This analysis is a long read and repeats itself in places, but we'll share some of it on screen and link to it. The Shanghai Gold Exchange was set up in 2002 and is now the world's largest exchange of physical. In 2023, they processed 75% of the total gold volume. The Custodian warehouses began later in 2014 to allow foreign participation in the Chinese market. Not much moved on that second bit until very recently, but very suddenly. In 2022, $300 billion in Russian FX reserves were frozen. And that forever changed global perceptions of the risks of having sovereign reserves subject to seizure. Central bank gold buying hit records going back decades, and gold prices have gone straight up. China's gold custody plan will move both of these trends farther and faster along. It will further de-dollarize global trade and create even more demand for gold. Earlier this year, the SGE opened up vaults and trading contracts in Hong Kong. Here is the press release from regulators there announcing that Hong Kong was open for business to serve governments, and institutional investors who are active in gold markets. And Hong Kong is also part of the London Metal Exchange's global network. That's also important because the gold trading can happen here in Asia and outside the trading centers in Europe and New York. And as central banks shift from treasury bonds to gold, it means higher interest rates for the American government and borrowers and higher gold prices. Here again is a sanctions problem. 32 countries have been targeted with economic sanctions in 25 years, and so there is a ready market for a new system. But regulators crossed the Rubicon when Russian reserves were seized. It was only a hypothetical risk before, but now any country or company doing business in Western countries and holding funds in Western banks suddenly realize they could be bankrupted overnight if the political winds blow in a different direction. There are many countries who are more friendly with China than with the US or the EU, and now they have the option of sweeping reserves out of our banks there and into banks here. This new strategy conforms to the Belt and Road system and will be understood very soon that countries who use these SGE vaults and Hong Kong banks will get preferred treatment. Emerging market economies have a larger share of their reserves in gold already, 20% on average, compared to just 13% for G7 countries. There are some risks to countries considering using Chinese custodians and vaults. There is likely to be pressure from Western countries and banks, and this is a new effort by China. It's a new system. Also, possible concerns involving transfers, and some may wonder if it could be a problem if a client wanted to liquidate gold holdings for US dollars. One of the primary objectives of this entire system, after all, is to de-dollarize and get away from SWIFT regulations. All those concerns are valid, and so it's important to remember who this is for. These are countries who love doing business in US dollars, earning them, that is. They hate the risk of doing business with US banks. Holding dollars in Western banks means they're at risk of sanctions. And governments and institutions cannot afford that risk anymore. So they're sending a lot of their dollars to Hong Kong, and soon they'll be buying a lot of Chinese gold. This is Qinghai. Be good.
Our Father, who art in heaven, hallowed be thy name. Thy kingdom come, thy will be done on earth as it is in heaven. Give us this day our daily bread, and forgive us our debts, as we forgive our debtors. Lead us not into temptation, but deliver us from evil. For thine is the kingdom, and the power, and the glory forever.